Hey everyone, Scott Kuru here. Now, over the past few months, something big has actually been unfolding in the property market, and I want to share that with you today. And what you need to know is that investors are flooding into the market right now at record levels. We're seeing pre-approvals surge, open homes packed again, and buyer demand is at levels we've never seen before. Today's video is going to be about some staggering data that you need to get across about the surge of investors which are entering the market right now. Now, I know there's a lot of noise out there. People are saying the market's actually too hot, prices can't go up. Prices have gone up, but wages actually haven't followed, and that the boom is done. We're hearing that a lot, but I'm telling you, we're only actually just getting started. I see this every day. Liana and I are on the ground talking to brokers, buyers, developers, landowners, builders. We're right inside of the industry, guys. So you're seeing the data come out. We're seeing what's happening 2, 3, 4, 5 months, even before that data hits the websites. And I can tell you firsthand, investors are back. So if you're wondering where they're buying and what areas are about to take off next, stay with me, because in this video, I'm going to show you the exact suburbs, going to reveal that to you, that investors are targeting in 2025 and 2026. So let's just zoom out for a second and actually ask the question, why are they flooding back? So right now, investor lending is at its highest level since 2017. More than 9 out of 10 investment properties sold this year actually made a profit. Rents are rising, yields are strong, and borrowing costs are falling after 3 RBA rate cuts. I can tell you right now, from my almost 20 years of experience right now, rental yield is the biggest driver of investors wanting to get back into the market. And on top of that, completions of new homes have fallen to the lowest levels since 2014. Now, in the first year of the government's National Housing Accord, which promised 1.2 million homes, we're already short 66,000 homes on a target of 240,000. Now, we already had a deficit of 200,000 to 300,000. You can add to that now another 66,000 to that deficit. And on the ground, it's actually no surprise to us. Liana and I are talking to people across the supply chain, from builders to councils. Everyone's saying the same thing. Costs are rising, red tape is actually choking approvals, and councils and governments are actually not aligned. Everyone's chasing their own targets and nothing's moving fast enough. In fact, I did a really good video about this that you must watch. I'll put a link to that in the description below. So when you've got record population growth, record migration, record low rental vacancies, and falling interest rates, you actually get a perfect storm where demand is exploding and supply is actually suffocating. I can tell you, having looked at the market now for the past 20 years, I've never seen every single factor like this lined up in the exact perfect way to drive the market forward. Now, this is why investors are jumping in right now before the next boom takes off. And here's actually what's interesting. The first home buyer 5% deposit scheme went live on October the 1st, and that's actually adding even more pressure to demand. Pre-approvals are at record highs, and we're already seeing queues at open homes, and auction clearance rates are actually climbing again. With all of this happening at once, it's not a question if prices will rise, it's going to be which locations first and how much. All right, now onto the part that everyone's actually been waiting for. Enough of the data talk. Let's actually look into the suburbs that investors are actually targeting right now in 2025. Now, of course, we do our own research here at Freedom. Liana Pan is the only data scientist and actuary in the whole industry. But what I want to reference is public data. This data is actually done by PropTrack. Now, PropTrack are very important. You should go to their website regularly if you want to be a property insider. They are actually owned by realestate.com.au. So not only are they collating all of the data from Cotality, CoreLogic, and all of those guys, like transactional data, but they've got website data as to where people are actually looking and searching, okay? So they know where people are going to buy even before they sign contracts and exchange that money. So these are the areas where investor demand is surging the most across Australia. Let's start with Sydney. Inner and southwest areas like Lakemba, Bankstown, and Enfield. These areas have been recording up to 15% annual growth, and rental yields on some properties are sitting around 5 to 6%. In Melbourne, affordable, well-connected areas like Notting Hill, Sunshine, Broadmeadows showing 11 to 12% growth with strong tenant demand. Brisbane, the Logan Corridor is on fire. Bennelly, Slacks Creek, and Woodridge are seeing 20 to 30% growth and still pulling solid yields. You've also got to look out for Ripley. This is a key area as well. Adelaide is actually a steady investor magnet. Places like Brooklyn Park, Camden Park, Morford Vale, with growth near 40% over the past year. Perth, this is still a standout. I'm personally investing in Perth right now myself. Hamilton Hill, East Cannington, and Cloverdale are recording between 26% and 41% annual growth, plus some of the lowest vacancies in the country. Canberra, consistent performers like City, Harrison, Braddon, all with stable yields around 5 to 6%. Here's what they all have in common. Strong yields. Now, many of these areas are still delivering 4, 5, sometimes even 6% rental returns, even as prices rise. They all have a really tight vacancy. Most are actually under the 1.5% mark, which means properties rent out in days, not weeks. Low new supply supply. The pipeline of new builds in these pockets is actually drying up and it's bottlenecked. They do have an affordability advantage. They're still well below capital city medians, giving investors more leverage and faster equity growth in the short term. These are the conditions that drove the surge in Perth, and now we're seeing them appear elsewhere. But for property insiders, let me make something really clear. This is not a list of where I'm buying or where Liana's buying or where our members are buying. These are the suburbs that PropTrack says investors are flooding into right now. And while that's interesting, it's not a strategy I like to follow. The suburbs that Liana and I are actually investing in aren't making the headlines. They are not in the top 10 hotspots list that you're going to see, because by the time suburbs make it into the media, the window is already closed. You want to get in before the headlines, not after. When I positioned my members and clients in Perth, no one was talking about it. When we moved to Brisbane, people said it was dead. And people are saying that about a lot of the areas that I'm personally buying in right now. Now, both of those cities are some of the biggest success stories for this property cycle. So that's the whole game as a property insider, finding the underdog suburbs that are about to take off, not the ones that have already peaked. So if you want to learn more about how we find these early movers and where the next growth suburbs are shaping up, click the link below. I'll break it down in more detail for you there. Now let's get back to the topic. So here's the reality. We're not building fast enough. The National Housing Accord target won't be met. And with borrowing power rising and population surging and investors returning, this wave is only just beginning. If you're sitting on the sidelines right now waiting for prices to crash, guys, it is actually not gonna happen. I'm seeing a lot of chatter out there on social media, a lot of so-called gurus and different people saying that, hey, now might not be a good time, and even putting down areas like Perth and Brisbane and saying it's cooked, it's done. This is not true, because right now, all the signs I'm seeing on the ground and in the data and from conversations with developers and councils point to another 2 years of really strong demand and rising prices. Of course, not on every location. Remember, there's 15,000 suburbs across Australia, but in those key areas, we're going to see a lot of growth. So what qualifies me to actually tell you where you should invest? Well, my name is Scott Kuru. I'm the CEO and founder of Freedom Property Investors, Australia's #1 property investment advisory. I'm actually partnered with my co-founder, Liana Pan, Australia's one and only data scientist and qualified actuary who actually heads up our research. Over the past 17 years that we've been doing this, we've actually achieved over 2,000 five-star Google reviews and helped over 10,000 Aussies to head towards their financial freedom. We do have a team of over 20 data scientists that work very closely with Liana to analyze all 15,000 suburbs in Australia and actually pick the winning locations for our members and our clients. So I'm not here to promote anything to you, but if you want more information about some of the locations that I'm personally investing in, you can actually attend one of my live masterclasses. So you can click the link below and you can attend that if you want to find out more about where I'm personally investing.